Good morning, everybody. We have a mixed trade in the grain markets here early on Thursday morning. It is 6:30 a.m. Central Time. March corn futures down 1 3/4 at 425.5. January soybeans down 1 3/4 at 1182. March Chicago wheat up 4 1/4 at 602 3/4. March Kansas City wheat up 2.5 at 564. March spring wheat up 4 3/4 at 563.5. The US dollar trades its lowest level since April 2018 this morning, so lowest in more than 2 years. The Fed said yesterday it's essentially going to kind of stick with its current policy, which involves pushing cash into financial markets essentially until they believe a recovery is secured, an economic recovery. So this has pressured the dollar. I think also, these vaccine hopes have probably driven some safe haven money away from cash and into other assets like the stock market or whatever. But in any case, the dollar very weak, and that's typically a positive factor for any commodity priced in U.S. dollars. U.S. ethanol stocks increased last week while production declined. Ethanol stocks were up 3.9% on the week at 22.95 million barrels. That's the highest print in ethanol stocks since May. The problem here is that gasoline demand is very poor. Gasoline demand rebounded last week. It was up almost 5%, but gasoline demand, implied gasoline demand, was down 15.3% versus the same week last year. So this surge of COVID cases, lockdowns, restrictions, whatever, has resulted in drastically reduced driving habits across the country, and that is not a good thing. Ethanol production declined. It was down 3.4% on the week, 957,000 barrels per day. That print is down 10% versus the same week last year. So we have some problems when it comes to ethanol. We have building stocks. We have very poor, kind of an ugly looking situation in regard to ethanol production margins during the first quarter. If you did not watch that live stream from earlier this week with Jordan Fife regarding the ethanol situation, and you want some more details on this situation and why it's kind of ugly for the first quarter, certainly go back and watch that video or listen to that podcast. Rains should be active across Brazil beginning early next week. You're going to see a more normal rainfall pattern return to a lot of the key soybean growing areas in Brazil, say Tuesday or Wednesday next week. That period from like the 22nd through the end of the year, basically, you're going to see more normal-ish rainfall, like seasonally normal rainfall for a lot of the country. And that's been something that's been missing. They've been running below normal in regard to rainfall in Brazil for a long time. That doesn't mean that they haven't caught rain. They've caught rain. It hasn't been totally dry by any means. It's just that the normal amounts of rain that are seen are very substantial relative to what we'd see in the Corn Belt, for example. But they're going to see more normal type stuff here between now and the end of the year, and I'd probably call that a bearish factor. I would say that this South American weather situation here has kind of a negative spin, given that forecast for the second week out. Not necessarily this next 5 or 6 days, but the 6-7 days following that is when you're going to see some better rainfall. Drought should continue to build across the U.S. southern plains. Very little relief in sight for the driest areas of North Dakota. They'll see a little bit of precipitation in North Dakota here between now and the end of the year, but North Dakota, South Dakota, Nebraska, Kansas, Oklahoma, Texas, Colorado, little to no precipitation expected in these areas between now and January 2nd, according to this morning's GFS model. We'll see an updated drought monitor from the government later this morning, and that will surely indicate that drought continues to build from west to east in some of these areas. USDA will be out with its weekly export sales report this morning at 7:30 Central Time. Soybean sales have softened quite a bit during the last 4 or 5 weeks, and that's not a surprise. We were aware that at some point in time the purchases would start to shift away from the U.S. and toward Brazil, and that's what's happening. Corn sales expected 800 to 1.6, soybeans 400 to 900, wheat 250 to 650. Corn market is kind of treading water here. We were unable to go back up and test those contract highs in the March futures at about 439. We've held that 415 level or 414 level underneath the March futures on a couple of occasions. Again, volumes have backed off a little bit. The ethanol situation remains poor. This is a big concern of mine, but exports remain a bright spot. And the combination of a very, very strong or record export program paired with, a smaller crop last year in the U.S. has largely offset the demand that we've lost via ethanol. But make no mistake about it, we've lost a ton of corn demand because of COVID and because of the ethanol situation. Soybean market, the bulls were surely disappointed yesterday with the action. I think a lot of people thought it was a given that we'd go up and blow through that $12 mark in these nearby January futures, and that was just not the case. And now we're 20 cents off that $12 mark here this morning. Again, I think that Brazilian weather situation, when you go out in that last week of the year here, is looking a little bit more favorable. Certainly, I talked about how export sales have backed off, crush margins have backed off just a little bit. So, there's still the potential for some liquidation between now and the end of the year. Funds still very heavily along these row crop markets. Wheat is a little bit higher this morning, but has really backed off. Did the Russia story top the wheat market? That's certainly a prospect, I suppose. You've got a big top in place on that March Kansas City chart at 588. We peaked at that level on like 4 different occasions, and we're a good, more than 20 cents below that here this morning. So we'll see what happens in the wheat. If you see some more downside in the row crops, I think that could be problematic. Cattle futures were higher yesterday. Nice higher day. The box beef market was down again, and cash was a little bit softer. We need to wait another couple days and see what develops. Ahead of the cash open, the Dow Jones is up 100 points. The S&P is up 17. Very strong trade in the stock market. The bonds are up a little bit. Crude oil, U.S. dollar, again, down to its lowest level in more than 2 years. Crude oil is up 17 cents. For any of you watching cryptocurrency, Bitcoin's up to almost 23,000 this morning after posting some fresh all-time highs yesterday. Remember, if you need some more information from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right-hand corner. If you would like to know when, how, and specifically I am pricing corn, soybeans, and wheat throughout the year, broken down by crop year, and by percentage, check out my subscription service. It's $49 a month. You can cancel it at any time. You do not need to have a futures or options trading account. There's no other fee. There's no other obligation, nothing like that. I won't try to sell you anything else, I promise. Just click the subscribe button. You can sign up through PayPal. Cancel that deal at any time. Everyone have a wonderful day today. I may have a longer form deal out this afternoon. I'll see how busy I get. We'll talk to you same time tomorrow at the latest.